I'm Bill Rayman, a mortgage broker in Los Angeles. A recurring question over these last several weeks have been, I hear it's easier to get a loan, is that true? Lending is becoming easier. I'm not entirely sure where that sentiment came from. It's certainly well-intentioned, and I certainly wish it were true. What is true is that the banks are offering more programs than they had previously. Stated income is starting to make a comeback. Lenders lending on people that had recent bankruptcies or short sales without having to wait 2 and 3 and 4 years are starting to make a reappearance. Interest-only loans are coming back. So there's a valuable mix of new products to choose from, and we all know interest rates are low and have been low for a long time. So I think that's sort of gotten people thinking that the lending environment's getting easier if banks are providing more things to basically buy. I don't think getting a loan has become any easier. In fact, in two regards, it's become tougher. One is there are, since January when the Dodd-Frank rules, Appendix Q came into effect, we have much more scrutiny, much more compliance than ever before. So the amount of paperwork and documentation, everything looked at very closely, never had this kind of scrutiny in the past. The problem with that scrutiny is twofold. One, it can make the process more aggravating. And two, let's face it, the more they look into things, the more likely someone's going to find something to object to, or to question, or to cause a delay, which could cause a purchase to fall through, or a refinance lock to lapse, and you're back in the market again. So that's reason one why I don't think it's easier, is all the extra regulations. Reason two is mortgages are becoming increasingly automated. The formulas that banks use to determine whether a borrower qualifies is becoming a little bit more computerized, less personal touch. Credit scores, income history, debt to income, liability history, all of these things are being increasingly put into a formula. And so the first barrier to get a loan is you've got to get past that formula. After that, a human underwriter is going to look at the file and can still ask for more information or documents or question whether this is a viable loan. Fannie Mae and Freddie Mac, as the largest purchaser in the secondary market of these loans, has also been leaning on banks not to be overly generous with the loans they're doing. Obviously, the more pressure they can put on the banks to be careful about who they give a loan to, the more secure it is for Fannie and Freddie to buy those loans in the next market. So there's a top-down influence to be conservative. And to illustrate this all, there's a wonderful recent story from Ben Bernanke, the former chairman of the Federal Reserve Board. He tells his story as both a funny story and as an illustration that, no, this lending environment has not really gotten easier. So this is his personal residence in, I want to say, Washington, D.C., or the environs. He had an $860-some-odd-thousand loan that in the fall of 2014 he tried to refinance. So let's face it, this is a gentleman who just signed a multi-million-dollar book deal, who gets up to $250,000 per speech. I think we can all recognize this is not someone whose income we're really going to worry about in the future. Nonetheless, he got turned down by his bank. The reason? Very simple. He'd been a wage earner at the White House for 11 years. He's now self-employed. And according to all these bank guidelines, doesn't matter what we know about his income producing, if he's self-employed and hasn't been that for 2 years and can document it on his tax returns, none of that future income is going to count. Has the lending environment gotten easier? I would say no. On the plus side, it hasn't necessarily gotten more difficult in the sense that you won't get approved. It's just you have to jump through a lot more hoops, all of which comes down to what I really do think people need is a professional on your side to help you navigate the system. For every person that can walk into a given bank, a wage earner, and get a loan, one, I'd say I'm not sure that's the right loan you should be getting. But for every one of those people, I'd say there's 10 who aren't going to have an easy time of it. The bank isn't designed to try and help you through it. You need the help of a professional, a mortgage broker such as myself, who understands the system, who knows which banks to go to. Each bank has its specialties. Each bank has the kind of clients they're looking for. It's really like shopping for clothes or any other item. Macy's is not Robinson's, is not Target. A broker can help you get through that, make sure the paperwork's correct, and can fight to get you the best deal.